So you've probably clicked on this video because you think silver's going to go up. Absolutely. Lots of people are wondering, how do I get involved in this space? How do I get into silver? So in today's video, we're going to take you through the 3-step decision-making process. What a time to be alive, guys. Let's go. When people approach me looking to invest in silver, particularly for the first time, we take them through the 3-step decision-making process when buying precious metals. So what are the 3 steps? First of all, which precious metal or metals are you buying? Secondly, you're buying coins or you're buying bars? And then thirdly, what size of coins or bars are you buying? So the first question, what precious metal or metals are we investing in? So the answer to this one comes down to, are we buying gold, are we buying silver, or are we buying platinum, or some combination thereof? Now, gold is the least volatile of the 3 precious metals that we sell. Therefore, it can be considered the safest of the 3. It's a slow, steady climb over time, beautiful, low-risk asset. It is the lowest risk asset in the entire financial universe. But you clicked onto this video about silver. Silver is essentially gold on steroids. It's more volatile than gold, which means that when gold goes up in price, silver typically goes up faster. But when gold drops in price, silver typically drops in price faster. So when the precious metals have a bull run, silver outperforms gold to the upside. And when the precious metals have a bear market, silver underperforms gold to the downside. Now, given that what we expect is a massive precious metals bull market for the next 5 to 10 years, combined with how high the gold to silver ratio is, how many ounces of silver it takes to buy 1 ounce of gold, we're expecting big things from silver here. In 2011, that ratio was only 30. 30 ounces of silver bought you 1 ounce of gold. And in 1980, that ratio was as low as 15 ounces of silver to 1 ounce of gold. So if you're buying the ratio at 80, and let's just say the ratio drops to say 20, well then you're gonna make 4 times as much money holding silver as you will holding gold. And that's not to bash gold, I love gold. But silver is gold on steroids. Okay, so the second step in the decision-making process is whether you're buying coins or whether you're buying bars. Now, coins cost more than bars. They cost more to produce, they have pretty pictures on them, designers need to be paid, which means that you, as the end client, are gonna pay more for a coin than you will for a bar. Now, me as a bullion dealer, I'm only going to pay you based on the metal value of your bullion. I don't care if it's got a pretty photo on it. I don't care if it's a really nice coin. I'm going to pay you the same as I would as if it were a bar. Now, I've just told you, you're going to pay more for a coin on the way in, which means that as a cold hard investor, if your plan is to sell back to me as a bullion dealer, I'm going to tell you just to buy bars. Save yourself the extra dollars on the way in, you get the same value on the way out, just go for bars. But coins have the potential to gain collector value over time as well, above and beyond just the price of the metal itself. So certain coins have become super collectible and people will pay way over the metal value for these coins. But as an investor, you're only going to be able to capture that collector premium when you sell it directly to a collector on the secondary market. Me as a bullion dealer, I'm not going to pay you for the collector value of your coins. So if you're a cold hard investor, you buy bars. If you like to play the collector game and try and profit from collector premiums, then you buy coins. So the third step is the size of the coins or bars that you're buying. We sell all the way from 1 gram of gold all the way up to a 1 kilo gold bar. In silver, we sell all the way from a 1/10 ounce silver round all the way up to a 1 kilo silver bar. So what's the best size to buy here? Now, the general rule is the bigger the coin or bar, the less you're going to pay per gram or per ounce. Just like when you go to Woolies and the 10 kilo bag of rice is cheaper per kilogram than the 1 kilo bag of rice, the same rule applies to bullion. Which means that what you should be doing as an investor is buying the biggest coin or bar that you can, with a little caveat that you can get full spot price for on the way out, which again loops back around to the best sizes to buy are 1 ounce gold and 1 kilogram silver. Because bigger is cheaper, but those are the biggest sizes that I'm going to pay you 100% of spot price for when it comes time to sell. So people ask me all the time, where do you buy silver from? There's a few different places you can do it. We recommend buying silver from a reputable bullion dealer like Liberty Bullion, or another one if you so choose. You can go online and try and buy your silver through places like eBay. We wouldn't recommend it. We've had clients in the past buy their gold and silver on eBay thinking they're getting a bit of a bargain, and then when they come in to sell it, we use our fancy XRF machine to test the bullion and find out that it's fake, that the gold was just gold plated, that it had lead or tungsten on the inside. There's a lot of money at stake here. I mean, the client that brought these fake eBay bars in, it was over 3 ounces of gold, which today is almost $20,000 that he got scammed for. So we do not recommend buying online through eBay and things like that. You can't trust those sources. Buy it from a reputable bullion dealer like us at Liberty Bullion, to know that you're getting the real deal. Now, there's also other ways that you can invest in the precious metals by buying things like ETFs, but the problem with things like ETFs is that you have custodian risk, counterparty risk. You've got a middleman between you and your precious metals, and you have to trust that middleman that they're good for them. Now, when things are going well in the world, that's all well and good, but if you look at who the custodians of these ETFs are, they're investment banks. Goldman Sachs, JP Morgan, these same investment banks that require a bailout every time the global economy takes a dive. Something to think about when you're looking at investing your life savings. So, we don't recommend ETFs for, first of all, counterparty risk, and secondly, management fees. This is something that people don't think about very much. When you buy your bullion with us at Liberty Bullion, you pay the transaction cost on the way in, and that's it. There's no more ongoing fees or charges, no management fees, no percentages taken out of your account every year, nothing like that. You've paid your fees up front, the bullion's yours, you can take it home, no more ongoing fees. Very, very important to consider. I'll also quickly mention that Liberty Bullion is incredibly competitive on fees. You can compare us to other bullion dealers across the country by simply pulling up our website, pulling up their website, and comparing our prices then and there to see who comes out ahead. I'll tell you right now, chances are that's going to be us. So do business with a bullion dealer that looks after you on fees, that tries to get you in as cheap as you can, and does not charge you any ongoing management fees whatsoever. So you've probably clicked on this video because you think silver's going to go up. Absolutely. So what do we think silver's going to hit by the end of this bull run? Well, the answer is over $1,000 per ounce. That is over a 20x return from where we are now, and that is not unprecedented. If you look back at the 1970s, silver went from just over $1 per ounce in 1971, and it hit $50 per ounce in 1980. That is a 35x return in 9 years. Is it possible? Absolutely. Has it happened before? Absolutely. Do we expect it? Absolutely. Guys, we expect silver to be the best performing financial asset of the next 5 to 10 years. Look, if you're interested in buying silver, guys, don't waste any time. Give us a call, hop on our website, call the 03 number, get in touch. We're here to help. We've got a great team of staff that can answer all of your questions. Come into the store, shake our hands, say hello, get a bit of a show and tell going with the guys. They're happy to show you the different products that we've got in stock so that you can see them physically for yourself. What a time to be alive, guys. Let's go.